Welcome back to Iraqi Dinar News, where today's update marks a historic turning point for investors, analysts, and everyday holders of the Iraqi dinar and Vietnamese dong. As of the current date in the USA, the much-discussed final rates have been officially confirmed. According to reports from both the International Monetary Fund and the World Bank, the Iraqi dinar is now valued at $0.39, while the Vietnamese dong has surged to $0.03. These aren't rumors or speculative guesses. These are the verified rates that have redefined expectations and jolted the global financial scene. For those who have followed this currency journey for years, this is not just news. It's a confirmation of everything many have hoped and waited for. The Iraqi dinar's new exchange rate of $0.39 per unit is a monumental step that signals Iraq's economic credibility has returned. After years of uncertainty and political rebuilding, the nation's oil-backed economy and ongoing fiscal reforms have evidently convinced global institutions of its long-term viability. This isn't just a boost in value, it's a formal acknowledgement of Iraq's renewed role in international trade and monetary stability. What may be even more surprising to many is the transformation of the Vietnamese dong. For decades, the dong remained undervalued, often dismissed by major financial players. But now, with its value confirmed at $0.03, Vietnam has stepped into a new economic era. This dramatic rise reflects deep improvements in Vietnam's trade footprint, especially in technology and manufacturing exports. Along with stronger foreign investment inflow, the new rate validates the nation's upward trajectory and demonstrates that it's not only part of the global supply chain, it's also a rising monetary force. But how did we arrive at this moment? The answer lies in months of behind-the-scenes collaboration between global financial institutions. The IMF and World Bank do not make such adjustments lightly. These rates are the result of intensive economic reviews, future stability forecasting, and long-term policy alignment. For two emerging market currencies to receive formal rate resets at the same time signals a broader shift, a coordinated reset in global currency priorities. This is no regional revaluation, it's a structural recalibration on a worldwide scale. For those holding IQD or VND, this isn't just validation, it's opportunity. A holder of 1,000 dinar now sees a value of $390.00. These are not projections, these are the numbers in effect today. But that doesn't mean you should rush to your nearest bank. Understanding how the rollout will happen is essential. Banks and designated exchange facilities will likely initiate structured redemption processes that include appointment systems, paperwork verification, and phased disbursements. This event is global, and the infrastructure must handle it in a stable, organized way. It's also important to understand why these currencies reach these valuations. Iraq sits on an estimated $16 trillion in oil, natural gas, and mineral assets. That wealth, combined with reforms aimed at reducing corruption and increasing domestic GDP diversity, makes this valuation a reflection of reality, not hype. Vietnam, on the other hand, has quietly built one of the most resilient export economies in Southeast Asia, rivaling even China in sectors like electronics, textiles, and agriculture. These changes aren't temporary, they represent long-term economic positioning. The broader implication? Other nations may begin to reconsider their own currency policies. When two previously marginalized currencies receive this level of recognition, it sets a precedent. Developing economies from South America to Africa might see this as a cue to initiate their own reforms in hopes of similar recognition. This could be the beginning of a domino effect, with transparency, fiscal responsibility, and international cooperation taking the lead. What's also significant is the human element of this shift. Many who invested in these currencies were once called naive or speculative. Today, that perception has flipped. Long-time holders are being recognized as strategic investors who understood the fundamental potential buried beneath unstable headlines and economic obstacles. This moment is not just a market win, it's personal validation for countless individuals who trusted the long game. Still, this news brings a new level of responsibility. A sudden influx of wealth can be just as destabilizing as the absence of it. If you're holding IQD or VND and preparing to exchange, it's essential to create a structured financial plan. What are your goals? Will you pay down debts, invest in real estate, start a business, or secure your retirement? Every decision should be grounded in clear objectives and professional advice. Wealth is not built through emotion, it's managed with logic and vision. Now that the new rates for the Iraqi dinar and Vietnamese dong are confirmed at $0.39 and $0.03 respectively, attention has shifted to how currency holders will actually go about exchanging. Redemption centers and licensed financial institutions are expected to oversee the bulk of this process. But it's critical to understand that this won't be a walk-in, walk-out event. These facilities are expected to require proper appointments, ID verification, proof of currency ownership, and in some cases, even structured payout schedules. Don't fall for offers from third-party brokers promising better rates or exclusive access. Any entity making promises outside official channels should be considered a red flag. Stick to verified institutions, follow instructions, and don't let hype rush your decision-making. Many scammers emerge during moments like these, targeting those who are excited or unprepared. If something seems too good to be true, it probably is. Another vital topic is taxation. Any significant gain in wealth, especially one resulting from a currency exchange, can carry substantial tax implications. Depending on where you reside, this could involve capital gains taxes, income tax reporting, or potential audits if large sums suddenly appear in your accounts. Always consult a tax expert or financial advisor before exchanging, and make sure to document every step of the transaction. That includes keeping a paper trail of your original purchase, current holdings, exchange confirmations, and bank transfers. These records can protect you later and simplify your tax filing process. Beyond personal finances, these currency adjustments will reshape how people interact with the global economy. With a higher valued IQD and VND, citizens of Iraq and Vietnam may now find international travel more accessible. Their currency has more weight, giving them greater spending power abroad. Conversely, tourists visiting these countries might find prices higher, but they'll likely experience better quality services and facilities as nations reinvest their currency strength into infrastructure and tourism. For local consumers and importers, this stronger purchasing power could translate into lower prices for foreign goods and better access to essential technologies and services. And for exporters, this shift can mean bigger revenue when trading with countries that use weaker currencies. A balanced adjustment like this strengthens the economy from both ends, domestically and internationally. For families relying on remittances from relatives working abroad, this revaluation brings substantial benefits. When a worker sends home $500.00 from another country, that amount now translates into even more value for families in Iraq or Vietnam. That means more groceries, better schooling, improved healthcare, and long-term financial progress. These seemingly small personal improvements ripple out across entire communities. Governments are also expected to use this moment to roll out broader reforms. With increased currency strength and international attention, it becomes politically feasible to improve public services, fight inflation more effectively, and invest in nationwide projects. Education systems, healthcare networks, and infrastructure upgrades are all more attainable when currency stability gives rise to greater national confidence and funding. Let's not overlook the real estate implications either. In both Iraq and Vietnam, a stronger currency opens new doors in property ownership. Families who were previously priced out of the housing market may now be able to buy. International investors may also be drawn to commercial and residential properties in these rising economies. While this boost in demand can stimulate the construction sector and create jobs, governments must also be cautious. An unchecked property surge could lead to a housing bubble, so regulation will play a crucial role in managing growth. But as exciting as this moment is, it's important to stay grounded. The numbers are real, the opportunity is real, But wealth, especially sudden wealth, needs direction. Without a financial plan, even large sums can be squandered quickly. Take time now to reflect on your priorities. Do you want to eliminate debt, invest in long-term assets, secure generational wealth for your family? Think in terms of years, not days. Consider setting aside portions of your gains for short-term needs, medium-term projects, and long-term security. Don't make decisions based on social media hype. Make them based on your values and future vision. The online reaction has been explosive. Telegram groups, Reddit threads, and Facebook communities are filled with celebration, strategy, and plenty of speculation. But it's important to separate emotion from information. Not every opinion is credible. Not every prediction is sound. Choose your sources wisely. Follow those who have consistently provided factual, measured updates, not those who create drama or exaggerate timelines, and always protect your privacy. Never share your personal banking information or currency holdings online, no matter how friendly or convincing someone seems. This currency reset is more than a financial event. It marks the rise of new players in the global economic arena. The confirmation of $0.39 for the Iraqi dinar and $0.03 for the Vietnamese dong signals that these countries are no longer being overlooked. They are being recognized for their reforms, their resources, and their potential. As Iraq continues to diversify its economy beyond oil and Vietnam expands its role in high-tech exports, both nations are stepping into a new era of relevance and power. The ripple effects will continue to spread. Investors will look toward other emerging markets with new eyes. Countries in Africa, South America, and Southeast Asia might find inspiration in Iraq and Vietnam's strategic progress. Central banks may reconsider outdated monetary models, and multinational businesses may begin shifting partnerships to these revitalized economies. You are witnessing a major shift in global financial history. If you've held on to your IQD or VND with faith, patience, and preparation, this is your time. Make the most of it by acting wisely. Stay informed, stay secure, and never let hype outrun your judgment. Thank you for tuning in to Iraqi Dinar News. If this report helped you understand the magnitude of what's unfolding, like and share the video, subscribe for more updates, and tell us, are you planning to exchange right away, waiting for further confirmation, or organizing your long-term strategy first? Drop your thoughts in the comments. Together, we're navigating the dawn of a new financial era.